Hi guys. So today I'm going to be talking about time frames and how I use the different time frames to trade. So as a beginner trader, it can be confusing switching between time frames. So if we have the pound JPY here, what we tend to see happening, this is the 4 hour I have. If we go to the daily, you would see something different. If we go to the weekly, you'll see something different. If we go to the 1 hour, and so on and so on. And what usually gets confusing for clients is that it's easy for the daily time frame to look bullish, but when you go to the 1 hour time frame, it looks bearish. And that's where you get confused. And what I started doing was ensuring that I get direction from my larger time frame. I get confirmation from a middle time frame and entries on the lower time frame. So my rule of thumb is very simple. I want to get direction from my weekly and daily time frame. So if the weekly and daily time frame is bearish, I just want to be bearish on the 4 hour time frame and the 1 hour time frame. I'm not gonna have bearish here and looking to go bullish on the 4 hour, because that is where the confusion comes in. So can you? Yes, if the market is in a downtrend on the weekly or the daily, there are going to be corrections. So for instance, if the market is falling like this on the weekly and we're at an area here where this market will find some support, it will correct. So can you take this trade? Yes. As a beginner, should you take this trade? No, because what tends to happen is this trade is a riskier trade because you are trading against the trend. So what you want to do is ensure that you are trading with the trend. So as a beginner, until you get familiar with the markets, what I would recommend is this. When the market is in a downtrend based on weekly direction, wait for the correction, then start to look for your entries and then look for confirmation. So I'm looking for confirmation here on the 4 hour, and then you can look for entries. So I take entries on the 4 hour as well, but again, as a beginner trader, you want less risk. You have to go down to the smaller time frame. That way you'd find smaller zones in to be able to place your stops. So this is what I do. I'm going to look for my direction on the weekly. We're in a downtrend. Yes, I'm going to look for confirmation of entries on the 4 hour, and then I'm going to look to enter on the lower time frames. And if it's an uptrend, we're going to do the opposite. Weekly, if we're in an uptrend, we want to look for areas to buy confirmation on the 4 hour and then execute those trades. You can go all the way to these daily levels, these weekly levels, but just understand, as you switch time frame, it's gonna take time. So a move, and the patterns form on all the time frames. So a move that would have taken 4 hours to complete here on the 30-minute time frame or the 1 hour time frame, that same type of move on the 4 hour could be 3 days, and that same type of move on the daily, weekly could be up to a month sometimes. For a pattern to execute on a daily time frame could be months. So you need to be mindful of that in your execution when you are looking at the different time frames. But this is an easy rule of thumb where you could do direction from the weekly and daily, confirmation on the 4 hour, and then look for entries in that same direction on the 1 hour, 30-minute, and 15-minute, guys.